Hi there, it's March 2021. Spring is arriving soon. I hope you are alright, and I would love to show the portfolio and the new stock I added to my daughter's dividend portfolio. Welcome to my channel, where you can follow my journey to set up and maintain a dividend portfolio for my 5-year-old daughter. For at least $50 every month, I started buying dividend stocks for my daughter since January 2020. Watch the whole video to find out which stock I bought for March and why. March 2021. I bought the 15th dividend paying stock and will give an overview of the portfolio and the market in February. This month I will analyze and compare Apple and Microsoft. If you are new and like to follow my journey and see the dividend portfolio of my daughter grow, then please consider subscribing or liking. I upload a new video each month at least. Let's do a small recap for my previous videos and discuss the market and portfolio in February briefly. I have bought 14 dividend paying stocks. Along the way I got diversified along each sector according to eToro, the broker I use. I have ensured that there are dividend payouts each month, so I can invest this directly the next month in a new dividend stock. What happened in February? We started at 3,700 and ended with 3,800 for the S&P 500. Not very exciting, but there's a lot going on in the world, and the S&P 500 went up to a new all-time high halfway of February at 3960. My portfolio went up a bit as well, from 7.3% to 7.6%, all in the green still. Remarkable were Pepsi, Merck and McCormick & Company. They all went down with 5% points or a bit more. The other side, AbbVie went up 8% points, Genuine Parts Company 13% points, and Disney even went up with 16% points. Disney, the only stock of my portfolio which cut its dividends, is the best performing stock up at 38%. I received 2 dividend payouts in February, AT&T and AbbVie, which totaled in $1.13. This will be added to the stock to buy in March along with the $50. And now I take a look at the stocks I will examine and why I choose these two. As I mentioned in the beginning, I choose to examine Apple, ticker symbol AAPL, and Microsoft, ticker symbol MSFT. Last month I examined Merck and Coca-Cola, based on suggestions in the comments, which I really appreciate. And now Frank Mularczyk suggested, I hope I pronounced it right by the way, he suggested comparing Apple and Microsoft. And yes, I knew these companies had dividends, but since they were not dividend aristocrats and had low dividend payouts, I did not even consider them. But since they are well known and I did a brief check, I got excited and decided to go for it. So a big thank you for the suggestion, Frank. Do you like how I work and want to buy the same stocks now and in the future as part of your dividend portfolio with no effort? You can make an account by eToro and copy my trades automatically by using the copy trader feature. Of course, at your own risk. I am not a financial advisor. So let's start with analyzing these companies. First, we take a look at what these companies do in short. Well, I guess everybody knows these companies. Many people use the devices and or the software of this company daily. Apple is an American multinational technology company, which started out making the famous Apple Macintosh computer, but nowadays mostly making money with iPhones and iPads. Microsoft is another American multinational technology company, mostly known for their operating system Windows and software like Microsoft Office. But don't forget Xbox as well. And so let's look a bit closer at these two dividend stocks and analyze them using the 7 steps. The first step is to look at the dividend yield, the annual dividend paid divided by the stock price, and this multiplied by 100 to get the percentage. A yield between 3 and 7% is considered to be a good catch. The dividend yield of Apple is 0.7%, and the dividend yield of Microsoft is around 1%. Both do not meet this criteria. The second step is to check the dividend growth of over 10 years or more, a sign of a solid dividend and a feature that is attractive for dividend investors. Apple has 8 years of consecutive dividend growth, not enough for this criteria. Microsoft, however, has 17 years of growth and does meet this criteria. The third step is to look if the payout ratio is under 70%. The payout ratio is the amount of earnings paid out in dividends. The dividend payout ratio is ideally under 70%. You do not want a company that pays almost every cent they earn to dividends only. That is too risky. Apple pays out 19%, which is great, very low, with room to grow. And Microsoft pays out 30%. A bit higher, but still great. Both meet this criteria easily. The fourth step is to look at the 5 years dividend CAGR. The dividend CAGR, or compound annual growth rate, is a fast way to measure the dividend growth. Numbers you would like to see is 7% or more, and if that is not met, then add the previous mentioned dividend yield. If they add up to 9% or more, then it's still okay. Apple has a growth rate of 9.5% and Microsoft has a growth rate of 9.8%. Both are great and meet the criteria. The fifth step is to check the trend of the dividend yield, a way to check the ratio of the stock price and the dividend payout over the years. You would like to see an uptrend where the dividend payout rises more than the stock price. I'll just check the last 5 years. Both stocks show a steady decline, not something I would like to see, so both do not meet this criteria. The sixth step is to look for the year-over-year trends of the revenue of a company. Apple shows almost every year an increase, so not bad, but not really good. Microsoft performs quite well and has an increase every year, so that's very good. The last step, number 7, is looking for increasing year-over-year cash flows. Remarkable is that both have large amounts of free cash flows. Apple shows a decrease in 2019, but continues to grow from then. So not bad, but not really good either. And Microsoft performs quite well and has an increase every year, so that's very good. Now to look at an overview of the steps and the results. Both companies do not meet the criteria for dividend yield, step 1, and are even far below the 3%. Only Microsoft meets the dividend growth of 10 years or more, step 2. Both have a great dividend payout ratio and meet the criteria in step number 3. Apple and Microsoft both meet the criteria of step number 4 of the 5 years dividend CAGR. Step number 5, the trend of the dividend yield. Both companies show a downtrend, so that's not good. For step number 6, a year-over-year trend of the revenue. Apple is not good, but not bad either. Microsoft has an increase all the way and does meet this criteria. For step number 7, the increasing year-over-year cash flows. Similar as step number 6. Apple is not good, but not bad either. And Microsoft has an increase all the way and does meet this criteria. If you rate all these steps with a 1 for good, a 1/2 for not so good, but not so bad either, and a 0 for bad, then Apple has a score of 3 points and Microsoft 5 points. I have to say that comparing and analyzing the dividends of Apple and Microsoft opened my eyes. I used to focus on dividend aristocrats with long records and dividend payouts which are relatively high. But since I look to keep the stocks 10, 20 or 30 years or longer, and looking for future dividend aristocrats is not a bad idea. Although of course Apple and Microsoft are already very big established companies. Remember, I am not a financial advisor. This is for entertainment and a bit of educational purposes only. Any investment has risks, Do your own research. So I found my stock to buy for March 2021. When the market opened on the 1st of March, I bought for $51.13 Microsoft, ticker symbol MSFT. If you like this video, please consider liking or sharing this video and subscribe if you haven't already. It helps me to grow this channel. Thanks for watching and see you next video.